A Fox Business Alert, another big hit to stocks today, and all the Dow losing more than 500 points in the 3 trading days before that all-important holiday shopping season kicks off on Black Friday. So is a bad lead up to Black Friday a big red flag for the economy? Gil Morales thinks so, but we're also joined by Tom Belesis, who's a little less concerned. Gil, first to you. What do you think?
Yes. Well, I think the market is in a 6-day dive from here, and it's basically, I don't see any area of support for the indexes between here and the October lows. And you're basically in a free fall right now. We've been down 6 days in a row, and I don't think that bodes well for the economy or the holiday retail season.
Well, Tom, I am hearing 2008 talk that we may go down to Dow 6,000 or 7,000.
That's just crazy. That's not going to happen. I mean, I have to disagree. I mean, the markets right now, short term, are definitely have to deal with multiple issues. You've got the European sovereign debt crisis. You have the debacle with MF Global, the fears of global economic slowdown. But as all these issues, David, okay, are addressed and dealt with, the seeds of a major bull market are planted. And you can see that with a lot of stuff.
They haven't been dealt with. They've just been kicked down the road.
They've been kicked down the road, but they're going to be dealt with. And as they're dealt with, the time to buy companies and great stocks here at these levels is going to be an unbelievable buying opportunity.
Well, Gil, I think there's going to be a lot more kicking down the road before these things are dealt with successfully, don't you?
Well, yeah, I mean, I have to admit, I'm only a graduate of Stanford University. I didn't go to the university of I am smarter than the market. So I listen to what the market's telling me. And if you want to sit in front of a freight train and tell me that it's going to turn around on a dime when you're coming off as hard as you are, and you're seeing big retail names like Amazon.com, which I am short, by the way, and Priceline.com come down getting hit. You see Tiffany getting hit. You see Best Buy getting hit.
Even
you see
Apple's
Abercrombie & Fitch getting hit. And you even see, yes, Apple as well. So the market is telling you something. It discounts the future, not the present and not the past.
Tom,
so my colleague is telling you about what's happening now. It's irrelevant. The market's telling you what's happening.
Don't fight the tape. That's the message from Gil.
No, and that's a very good point. But look at the entire global middle class that's been created by the development of China, India, and also South America. I mean, that adds a lot of new customers to the U.S. I mean, that's why S&P 500 gets the majority of the profits from overseas. And they have been strong, and they're going to continue to be strong. You have a major oil and natural gas drilling boom taking place. That's going to give us a lot of cheaper sources of energy and create hundreds of thousands of jobs.
On the other hand, Tom, some of the success of Brazil, for example, and some of those smaller economies is selling to Europe. If Europe is going into another recession, they're not going to have anybody to sell their stuff to.
I believe the recession fears are overblown. I think
you don't think Europe's going into a recession?
I do not. I think the ECB is going to step in, buy the bonds. I think overall, longer term, as the markets pick up, that the solvency issue is going to be addressed. The markets are going to trade higher.
Well, Gil, forget about Europe for a second. What about us? Do you think we're going into another recession here in the U.S.?
Well, I think the market's telling you that the economy is still soft. Now, I don't know how far you're going to come down, but right now it looks like you're going to test those early October lows, and that's just where you're headed. You know, other than that, unless I see the market find some support and some of these leading stocks start to act better than they are currently, you know, I'm not going to change my view. I'm going to stay away from stocks on the long side, and I'm actually looking to short. You know, like I said, I'm short Amazon.com.
Right.
I think that stock goes lower.
Well, Gil, is there anything you're long on, anything you're buying and holding?
Inverse ETFs.
Which is the same kind of bet on things going bad,
I don't see
right?
anything, you know, I don't see anything here that's worthwhile taking a stab at. Like I said, if you want to try and catch a falling knife, go ahead. But I think this has to play out for some time. Now, and I do agree with Thomas in that bear markets do sow the seeds for the next bull market, but, you know, the seeds can be sown. It's just a matter of how long they start to sprout, and I think that's a ways off right now.
Well, Tom, we've both been beating up on
is indicative.
Gil and I have been both beating up on Tom for a second, but I got to ask, I look at Apple.
Sure.
I look at Apple stock, and I see what they have coming online. This Apple TV is a very exciting product. Yes. When they get Apple TV online, I think they're going to see their stock go up again. I think it's probably going to go much higher than what it is right now. I might think of buying Apple at this price.
I think the valuation is so compelling right now. And if you look at the earnings, again, for the quarter that just came out, they were amazing. And I believe that over the next quarter, earnings are going to do just as well.
Higher?
So I think ultimately, if you look at companies now where they are and you forecast 6 months ahead, I think they're going to be great buying opportunities.
Gil, to answer your question, because I heard you, there is a psychology. You don't fight the tape. I agree with you. But there is also sometimes a herd mentality. And people get caught in this vortex and they sell, sell, sell. Aren't we? Isn't there a little bit of that going on, Gil?
No, bearish sentiment, you know, it was very bad. You had a lot of bearish sentiment at the lows in October, but now you have bullish sentiment overtaking bearish sentiment here. So I don't think that that's
I didn't see bull in the market for the past 3 days. We're down over 500 points.
Well, if you look at, say, for the Investors Intelligence Survey of investment advisors, for a period of time back in early October, you had more bearish advisors than you did bullish advisors. Now that's flipped back to where you have more bullish. So I think the bearishness that you saw in early October has been worn off by this rally that took you back up in the market, and now we're rolling over down through the 200 and the 50-day moving averages,
I want
look good.
Both of you guys to give me something we can hang our hat on here. And first to you, Gil, at what point would you come in to buy?
When I start to see stocks start to settle down and I see this downtrend end and we start to see a positive move to the upside, we look for a follow-through day where the indexes are up 1.5% on very heavy volume, and that usually signals a turn. We haven't seen that yet.
Tom, on the other hand, what are you buying right now?
We've been buying selective technology companies, selective energy companies that have come down on this pullback. So overall, going into the next quarterly report, which I believe is going to be outstanding, I think companies at these levels are going to look phenomenal at a point to buy.
Tom Belesis, Gil Morales, good to see you both, gentlemen. Thank you very much.